Welcome to my channel. Time for Bitcoin.
Once you get past, I think, the personal embarrassment of what the industry has done, how it reflects on us, who's been on the show, really brings you back to Bitcoin and self-custody and maybe Ethereum, and nothing's changed. You know, and so I've had the same existential crisis, but I think I've hopefully come out the other side. And I continue to do what you guys are doing, which is just buy Bitcoin and Ethereum. But Lou, I want to ask you a question, because I could make the argument right now that if we're talking about 2023, and given most people don't have access to it in both legacy markets, and in crypto, this, I would argue, would be the year for seed round early venture capital.
Look, I invest all the time. I'm never trying to time the market myself personally. I don't think I've got the ability to do that. I think few people do. Bitcoin is by a margin my largest holding. I buy Bitcoin every day. Use Swan Bitcoin. It's a great app to do that. I told you I was an equity analyst for 9 years, and stopped at the end of '99. I put out 2 price targets in 20 years. One was on Facebook in 2010. The other was in 2021, January. I put a 10-year price target on Bitcoin of $1 million. I get there through math. I could be wrong, but if I'm right, I know it gets there by going up and down. And if it gets there, all that up and down to me is just noise. And I talk about edge. I think for the most part, I index my money across the landscape. But for me, I think my edge is, and the main reason I'm here is because of community. I think that's the biggest difference that's going on between what happened before and crypto. To me, this is about, for the first time in history, we have a tool set to solve for the community instead of the man in the middle. And I think that's going to be the biggest thing to happen in history. I ran a company called Volt, the largest social network in history. And so it's the largest social network before MySpace. And so I was thinking deeply about community, 20 years ago. And so to me, I go around to the ecosystem summits, and the highlight of my 5.5 years, 24/7 crypto was ETH Denver 2020, because seeing that community, and they're in the pantheon of communities, and there's not going to be an ETH killer because they're not going to kill the community. That community continues to grow. So, I'm a huge believer in ETH. Other extraordinary communities I've seen, Cello. If you guys know, they're really, it's about financial inclusion, making the world a better place. Huge fan of Cello, a huge fan of Horizon Labs, if you're familiar with that. Tezos, obviously, I think community is kind of the new oil, but to the degree, data's new oil. Big fan of the graph and what they're doing.
So Lou, how would you put the the XRP army in that spectrum?
That's a great question, Mark. I have not spent any time with the XRP community. I've actually reached out. I did a fireside chat with Brad Garlinghouse at Davos last year. That was really my first substantial interaction with them. Interestingly, coming back to Solana, I went to Breakpoint, last year because, oh my God, the world had never seen value creation like Solana. It was, got to 100 billion in like 15 minutes. It was crazy. Yes. And I wanted to go there and see what the community was about. And it was at the peak of the mania. It was the best, amazing party. But for me, at the end, the majority of people I met were there for the money. And I don't have anything against the people who are here for the money. I say, come on. But you just have to realize that the people who are here for the money are going to leave when the money leaves. And eventually the pendulum's going to swing to the other side. And that's what Solana is dealing with today.
You just made a great image. So at Bitcoin 2021 down in Miami, I went to the Winklevoss twins party at Post Malone's manager's house, which is pretty nice. And
I was there.
Yeah, that's right, Billy, you were there. And it was funny in that I was trying to make it to when Diplo came, but I'm old, so I was leaving. So 11:45, I'm like, you know what? I'm not going to wait till 2 a.m. for this guy to go on. So I'm leaving. But as I was leaving, boatloads of glamour people were coming in. I mean, like the most beautiful guys and gals you've ever seen coming in at midnight. And to Lou's point, those people as soon as the booze run out, they're gone. They're gone.
Analogy. Yeah. Oh, that my top of the market story also involves Diplo. Unfortunately, it was a very similar situation at Art Basel last year, which was December 4th, which is when Bitcoin finally broke below 52. It was arguably the top of the market. And I was with all the FTX guys, all the Coinbase guys at a party where nobody had phone access. And Diplo was DJing, and everybody was screaming that Bitcoin was crashing, and nobody could access their phone to see the price.
I remember that December 7th, I think it was.
Whatever it was,
Friday,
somewhere between 4th and 7th, it went from like 52
waiting.
to 42. Remember that? Yeah.
Remember vividly.
I mean, and it really is a perfect analogy. But Lou, back to just really quickly, and Mark, all of you guys, this applies, but valuations on everything are so far down, and if we believe that the future is being built.
No. Prices are down, Scott. Prices are down. Valuations may or may not be down, but prices are down.
I thought VC valuations were dropping.
VC.
Yeah, sorry.
Yeah,
I said, like down rounds and seed rounds are a fraction of what they were a year ago this time, as far as like the valuation of new companies. So is this a good time? If this really is towards the bottom, I mean, there's a lot of dry powder on the sideline, but is this a good time for people to invest in early stage, or is it just too scary?
I think it's always a great time. Can you time the market? No, look, Facebook, I bought it in Facebook originally at $6 a share. And then it went to an IPO, and I forget, $40 a share. And then it crashed to $15 a share and eventually got to 365. So, I mean, if you try to time it, you're going to miss that huge, people would tell me, why didn't you sell it at 40? I said, because I think it's worth a lot more than that.
Yeah.
Well, venture, this is the golden age of venture capital for our space. And I'm stealing that from Andreessen. And look, he's right in that early stage venture, to Lou's point, is evergreen. The one thing you can count on, good markets, bad markets, is human ingenuity and innovation as an asset class. That's when my pinned tweet is my pinned tweet. It is the one thing you can count on. And in good periods and bad periods, there will be innovation, disruption, new business formation. So true early stage investing, not the late stage bullshit, but the true early stage, seed stage investing is evergreen. However, even within that beautiful, incredible wealth creation machine, there's cyclicality. And the very best time is at the troughs, at the economic and sentiment troughs, when people are getting laid off and companies are getting busted up and valuations are crashing and people are scared and no one wants to invest. What happens is money flees, so you can't raise money. I'm trying to raise my fourth fund. It is freaking impossible. I mean, impossible. And that's the best time to invest. And I'll give you one quick story. So in the 93 recession, bad, right? Real estate collapsed, really bad. There's this little single guy that worked for Bell Labs. And he's like, hey, you're laying me off. I'm losing my job, but can I take my project with me? And they're like, yeah, whatever. Dense wave multiplexing. Don't even know what that is. Fine, be gone. So he left and he marched up and down Silicon Valley saying, hey, don't you want to back my dense wave multiplexing company? And all the VCs said, go away. Yeah, no. He got his retired third grade teacher in Philadelphia to give him $300K. And he started a company called Sienna. And his stupid idea was you take white light that goes through fiber optic cables. It carries X data. You shine it through a prism, you divide it into colors. Each color takes the same amount of data. People are like, that can't work. It does work. And that company went up to gazillions. And that woman, I love this part of the story, turned that $300K into $300 million. That's the way capitalism works. And that's because he had an idea. No one wanted to back him. And yet he persisted. He was resilient. And that's what's happening right now. All those people that just got laid off at Coinbase, some of them are going to be incredible founders. All those people that are getting laid off at Google are going to reemerge. Not all of them. People are laid off at Twitter. And this is the time.
there's
when
two
you
sides
want
to the
to
table,
back
right? There's
talent.
the entrepreneur side, and then there's the early stage investor side. On the early stage investor side, and it's both the perfect time for both, in my opinion. On the early stage investor side, the only thing that matters is, do I have access to capital to invest, and what is the absolute return on dollars invested, which is obviously going to be relative not only to the valuation that I paid, right, but the valuation I exit at. So you want to optimize for both. Well, historically, you've now optimized for the valuation you're investing at if you're a seed early stage, 100%. Okay, and unless this time is different, I don't think it is. Okay. And so the question is, do they have access to capital? And if you've ridden other troughs and highs, you have access to capital as a seed investor. Okay. And on the other side of the table, it's exactly what Mark said. I mean, if you have all these talented people who are leaving jobs, who maybe in the back of their mind have wanted to be an entrepreneur, but didn't have the impetus. Well, the best impetus is, hey, I have no choice. I've been, maybe not no choice, but I've been pushed and backed into this, and now is the best time. My incentive is there. I'm passionate about what I'm doing, and I have the grit. I've learned what grit is. I've probably learned a little bit about cash flow, right? Which, if you're starting a company when the money is sprinkling down like manna from heaven, you don't really learn a lot about cash flow, right? You think money's free and you should get yours, and that's not reality, right? And so you actually have this kind of really, I think, compelling equilibrium on both sides of the table right now, which makes it super compelling to be starting companies. And we have an angel fund focused on crypto at Abra. Mostly because it adds value to what we're doing, and some of our LPs in the fund have asked us to do it. But we're seeing a lot of interesting stuff right now, and I suspect that's going to accelerate.
Yeah, I met with an entrepreneur yesterday. I mean, unbelievable. Not pure crypto, but related to digital assets and gaming. And these guys have a tech that, to me, is the equivalent of that Sienna story. They have an ability to increase the throughput of engines by 100x, and that's going to be a valuable asset. So it's amazing, and these guys are, they were kind of put out of work because of a bunch of different reasons, and they're okay. They're not worrying how to make their mortgage, but they're hungry to start this idea on something that they've built. And again, I'm not really a tech person, so I can't evaluate whether they can do what they say they can do, but I'm gonna have some people look at it that can. And if they can actually do what they say they're gonna do, it's gonna revolutionize gaming, it's gonna revolutionize the transition, it's gonna accelerate, not revolutionize, it's gonna accelerate the transition into blockchain gaming. I mean, really cool stuff.
Lou, is 2023 going to finally be the year for blockchain gaming? I know you look deeply at this and obviously study the community, and we have these cycles, DeFi summer and NFT summer and metaverse fall, and they seem to fall flat. So we're going to have some sort of narrative. We will have these little bubbles in 2023, but can gaming actually break through this year, since Mark mentioned it?
I think I might have told you the story of when I was running Bolt. We had more than 20 million kids, looked at buying 3 of the largest, the tiny little videos. Time for streaming was the pipes were finally fat enough.
YouTube.
Yeah, and we bought the largest one and talked to the second largest one about buying them. And about a month later, somebody uploaded a video called Lazy Sunday. It was this Andy Samberg Saturday Night Live video onto the second biggest site, YouTube. And that day they became the fastest growing website in the world. And 6 months later, Google bought them for $1.5 billion. And
What a deal, yeah.
But to me, I just feel like, why is the price where it's at? Obviously Sam didn't help, but the price is where it's at because we haven't had our lazy Sunday moment yet. We haven't built something that people, other than Bitcoin, Ethereum's awesome, but that the broad public market actually can use and wants to use. And I don't know whether that's going to happen, next week, next month, next year, or potentially never. Hard to imagine.
March 15th. No, I'm serious. And why do I pick that day? The announcement was made December 7th, this past year, by Ledger. again, we're owners, and the announcement of the stacks is the iPhone moment, right? The iPhone was released 16 years ago Monday. I know that because it's my wife's birthday. And it was released on January 9th. And that day, Apple stock fell 40%. Because actually not that day, it took 2 weeks, but over the next 2 weeks, stock fell 40% because people said no one will ever pay $500 for a phone. You're right, you won't. You'll pay $1,500 because it's not a phone, right? It's a supercomputer. And the same thing happened when Mark Andreessen introduced the browser for the internet. Is you need a gateway. You need that thing that makes everybody want to have this. And I believe the stacks is that. It's they hired the guy who built the iPod, literally the guy who built the iPod, which revolutionized, right, walking around with a device. And I think that device, an HSM with functionality, because you think about your phone, I have 200 apps on this? How many do I use every day? 3, 4? Okay. I don't need much functionality. I need a camera. I need, be able to see, and my email, but I want my wallet. But Apple, Samsung, they haven't figured it out, and they're not gonna. So someone else is gonna have this aha moment. And when everyone has crypto in their hand 24/7, the world changes.
So the revolution is self-custody. I like that vision after last year. I mean, Bill, I want to ask you before, I know we got to go in a couple minutes. Well, A, do you agree that, as obviously you own a company where people custody their assets, so do you agree that self-custody is sort of the future there? And I know you believe in self-custody. And also, we talked about the party and people leaving anecdotally, but you probably actually have the data on what is happening there with new signups and customers leaving. So I just want to get some context before we go.
Yeah, so a few things. I mean, we've always said that one of the core tenets of a trusted third party should be, if you're in a custody trading account, you should have 24/7 access to your funds, and you should be able to process withdrawals 24/7, deposits 24/7. If you're in a 9-month CD-like term product for earning interest on stable coins, that's different. You got to wait 9 months. Okay, that's not what I'm talking about. Do I think that the majority of the public is in a position to self-custody? No, I don't. And I don't think that's going to change ever. I think it's going to be relative to motivation. And the motivation spectrum is going to include computer scientists who want to do it because they think it's interesting and they've read that that's what you're supposed to do and they understand it. And then there's people in Argentina and Afghanistan and El Salvador and Turkey and places where either the money's gone to shit, the banking system's gone to shit, or both, or they're in a war zone like in Ukraine, and they're highly incentivized to self-custody. They'll go through the pain of learning how to do it because they need to do it. My mother doesn't need to do it, even if she believes that when I tell her that this is the future of banking, she's not incentivized, right, to take any device, elegant, beautiful, hard to use or not, doesn't matter. She's not incentivized to do that. She's incentivized now at 80 to use an Android phone or an iPhone because that's what her grandkids are using and she wants to communicate with them. So she'll go through that effort because there's a very strong incentive there. And so, I look at this kind of, self-custody versus trusted third party as a spectrum. And that's why it's so important to me that when we have trusted third parties that act as the gateways here, that we have the rules in place to mandate transparency, mandate oversight. But one of the core tenets is, do I have access to my stuff 24/7 so that I can have personal agency? Even if I have my risk concerns, that's fine. I have no problem with that. Do I have 24/7 access to my stuff? And I think that's how this is going to play out for the next couple of years. I don't think there's a single killer app like a Netscape moment for crypto. I think there's too many moving parts. The browser was ultimately about information access. It was very straightforward. I mean, there was a whole bunch of things that were happening on the internet before that, from news groups to other things. And the browser and HTML model just simplified it for everyone.
But it was AOL.
and it was one thing. AOL definitely helped, and so crypto and the broader banking system that we're replacing, the monetary system that Bitcoin is trying to replace, there's too many moving parts to say, oh, we have one aha moment. Every person in every country on the planet is different, and that's why people in Ukraine are doing things very differently than people in the US, who are doing things very differently than people in Argentina.
Thank you for staying until the end. Please like and subscribe if you appreciate my work.